next several videos, I am going to be walking you through how to use this mobile home park analyzer to look at deals and analyze whether or not they might be good deals to invest in. And today we're going to start by looking at market. I list the market analysis as the first thing that I want to do because I believe that it's the most important part of investing. You want to make sure you get the market right. What is it, that old adage in real estate? They say that the three most important things are location, location, location. I would say that I'd like to slightly change that and say the three most important things are demand, demand, demand. What you want is you want to invest in a market that has solid short, medium, and long-term demand. And I include short, medium, and long-term demand because you may be looking at a mobile home park that's 100% occupied in a maybe not so great market, and you may be thinking, well, it's 100% occupied, so why not invest in it? And it might be that that works out fine, but it could also be that this market is very dependent on, say, oil. And if oil prices were to drop, or if something were to happen with the oil market, then this mobile home park, which houses many people who work in the oil industry, may suddenly decline and may suddenly go down. And that's why when I think about demand, I'm always thinking about not just the short term, not just the demand that's currently in place, but the midterm demand as well as the long-term demand. So if you remember that, just think in terms of demand, then you'll probably make good decisions when it comes to investing in real estate. So let's start here. I'm going to go ahead and I'm going to blow this up so we can focus in on the market. So what are some of the things that we're looking at in order to test demand? So how do we start to get a sense for the market, the area that a park is in, as well as potential demand? Well, one of the first things I like to do is I like to just throw the address in Google Maps and take a look. Take a look at the area. So this little marker shows where the mobile home park is, and I'm going to scroll out. And what I'm looking for is I'm just looking at density. Like, is there a lot of people in this market? Does it seem like the population size is pretty good? And I'm looking out and I'm scrolling out and I'm like, yeah, this density does look pretty decent. If you scroll down here, wow, look at this. Oh, well, it's right next to Orlando. So you can see here, if you're invested anywhere within Orlando, based on the density here, it's probably a pretty good market to be in. And this is just right north of Orlando, so it's probably a suburb of Orlando. I don't know that much about the market yet, but that's what I'm guessing. And it looks like density is looking pretty good. So let me give you an example of a market that is not very dense. So I was recently talking to an investor who invested in a much smaller area. This area is Blytheville, Arkansas. And as you can see, just looking at a map, you can see, wow, it's not very dense. There's not a lot of population here. Yeah, as you scroll out, there's not many cities nearby. There's not a lot of other things that are happening. And so just right off the bat, my guard would be up. Is this really a place that I want to invest in? I'm not sure yet. I have to find out what I can to make me feel comfortable about short, medium, and long-term demand. And we'll go over some general metrics that people have in order to test markets numerically, like what some of the objective data might be for you to look at. But just by comparison, so you can see this is the mobile home park that we're looking at. Looks like it's good density. It's part of this sprawl here above Orlando. So it's passing the sniff test so far, whereas a market like this, we're going to be a little bit more skeptical of because it's just, there's not much else around or nearby it. So we're going to take a look at the MSA population. So how do we do that? So go ahead, take a look here. Yep. So I went ahead and I typed in the zip code of this area and I found out some really good statistics about the area. So I found out, for example, that the population is about 23,000. So on my sheet, I'm going to go ahead and include that, the zip population. And then I'm on best places. So best places, and then you can just type in the zip code and then this information will pop up. Then once you type in the zip code, you know what the population is of the zip or the city. And then you could go ahead and you could click on the MSA area, the metro area, and then you'll find out what the metro area population is. And so it's 623,000. So I went ahead and typed that in. Typically, what you're looking for is 100,000 plus in your MSA. This is a statistic that many investors will talk about when it comes to mobile home park investing, and maybe other types of multifamily investing as well. It's really going to depend on your risk level. So some people are wanting to invest in core plus areas, but what that means is you're probably going to be paying a lot more for those mobile home parks because the cap rates in those areas are going to be a lot lower. So we have here 623,000 MSA. That looks like a pretty good number. We've already looked at it. It looks like it's in a pretty good area in terms of density. Zip code population, 23,000, looks pretty good. So now we're going to be looking at median household income. Again, that information is found on the website. We're taking a look here at the metro median income. And so we're taking a look and seeing that. So it's 42,000. And then we're looking at the home prices, 211,000. When it comes to mobile home park investing, you want to make sure that there's a spread between the median home price and what a mobile home costs them. So for example, if a brand new mobile home costs them $50,000, but the average price point of a single family home was also $50,000, well, then you don't have as much of a competitive advantage when it comes to affordability. People may still want to live in your park because of the other amenities, and it may be that a $50,000 mobile home, brand new mobile home that's energy efficient, may be a superior choice in terms of housing than a $50,000 single family home. But again, since you're playing in the affordability market, affordability is a key component, and you want to make sure that you do have an advantage there in terms of affordability. So if the average median home price is $211,000, that's pretty high compared to your average mobile home cost, which is probably somewhere, it's going to retail to the consumer somewhere between $45,000 to $65,000, depending on what market you're in. It could be a lot higher, it could be a little bit lower depending on the quality of home. But yeah, that definitely, as long as the median home price is over $100,000, you're probably looking at having a pretty good competitive advantage there. So one thing I like to know, just for the sake of argument, is what is the average mortgage monthly home payment if someone were to buy a median home? And so I use 10% down, a 4% rate, 30-year AM, and that comes out to about $910, which actually is not that bad. But the question is, would the people who are buying in your park or potentially renting a home in your park, would they have that $20,000 for a down payment? For many of the mobile home park residents, even coming up with $1,000 or $3,000 deposit to move into a mobile home park is a challenge. So that buying a home in that market may just be out of reach for those consumers. So remember, there's an entire study on this actually that was done by Dr. Charles Becker. He's a PhD at Duke University who studies mobile home parks. And what he found when he was surveying the mountain states and Midwest region is that the biggest competitor for mobile home parks is actually apartments. So you want to look up what the average 3-bedroom apartment rent is. And in this case, I found that the average apartment rents were, where is it? $1,500. So $1,500 for the average apartment rents. So that's pretty high. I mean, $1,500 is pretty high. And the mobile home park that we're looking at, the lot rent is $410, which is pretty healthy for a mobile home park, right? And it's probably because it's in Florida. And on top of that, the average park-owned home payment on top of that is $193. So if someone is buying or someone is renting a mobile home in that mobile home park, then their total all-in payment is going to be about $603. So right away, you can see that if the average apartment rents are $1,500, and right now the total lot rent and park-owned home payments for the mobile home park is $603, that's a huge spread. I mean, that says that there's a huge pricing advantage to living in the mobile home park. I'm going to actually pause the video for a second because I want to add in one more calculation that I forgot to add. I added in this calculation, and this is the market all-in rents. In order for your mobile home park to be a competitive housing option in this market, you want to be less than the 3-bedroom apartment rents for the all-in payment. So that means that typically, or one marker that we use, and you could use a more aggressive or more conservative approach depending on what you want, is we apply an 80% ratio to the 1,500 or the average 3-bedroom apartment rents in order to find out the max, the all-in payment, the max all-in payment that we would want the residents to be paying. So right now, if it's 1,500 in terms of 3-bedroom rents, 80% of that would be $1,208. So that means that potentially the all-in payment that a resident might be able to afford in this mobile home park community might be around $1,200, and it'd still be a competitive edge to the 3-bedroom apartments because it's only 80% of what the 3-bedroom apartments are charging. Now, again, this is also going to depend on amenities, and once you dive in, if you decide, hey, this is a park I want to dive into further, you're going to have to look at comps and see what other mobile home parks are charging. If other mobile home parks are charging less and they have nicer amenities, then you'll have to factor that in. Is will you be able to bring people into your community if you're charging more than everyone else? Typically, that's not where most major operators want to be. They want to be somewhere below the top of the market. But there are also cases where, let's say that this is a very impacted market where housing is just hard to find. It's 100%, everything's occupied. It could be that across the board, market lot rents and lot rents overall are just under market and can be pushed even higher if that's what the numbers look like. One other thing I want to look at is I want to look at population growth over time. So I have here some websites I like to look at. This is world population, and I want to see what the annual growth rates are like. So the main thing I'm looking for is positive growth rate. I want to make sure that there's more people coming in than leaving. Typically, that is a good sign. I also later on, again, if you decide that this is a deal that's worth looking further at, you want to dive into the types of jobs and what type of industries, because again, it's not just now what the short-term demand is and the midterm, but it's the long-term demand. And what does it look like going out 5-10 years? If you own the park that long, what's the demand look like in that case? And one of the best ways to assess that is look at the type of jobs and type of industries that are actually in that area nearby. So far things are looking good. So a couple of things that we're liking. We like the MSA population. We like the fact that the median home prices, $211,000. The other thing we want to look at is we want to look at apartment rents. 3-bedroom apartment rents are $1,500. So if you take the median household income, I forgot to go over this earlier, and you multiply that by 30%, that's what the federal government considers affordable. So as you can see here, $1,000 is what's considered affordable for your housing payment if you're making the median income of $42,000. So apartment rents in this area seem to be really high compared to affordability. So there might be a real strain here for people looking for affordable housing options. So that's also a good something that's in your favor, because there could be a real demand here for affordable housing. And demand, again, demand, short, medium, and long-term demand. That's what we're concerned with. And you can see here the total lot and park-owned home payments is $600. So there's a huge gap here between not only what the apartment rents are charging, but also what the affordable rents might be. So it looks like you may have a real competitive advantage. Now, when we dive deeper into this deal and we look at occupancy rates and we look at other comps within the area to see what the other comps look like in terms of occupancy, maybe the story starts to look a little different. I mean, if we look at if we dive deeper into this deal and it's like 20% occupied, it's like, whoa, something's going on here, because with this much of a competitive advantage in terms of affordability, you would think that this thing would be close to fully occupied. So that's going to be a question. If it turns out that it's not, that's going to be a question that we need to dive into when we do our diligence and as we dig deeper into the deal. But right now, just looking at the market, we have overall positive market growth over the last 3 years. In terms of population, we have a solid over $100,000 median home price. We have over 100,000 population in terms of the MSA. We have a huge gap here between 3-bedroom rents and what the all-in payment for lot and park-owned homes are. So this right now, I'm not seeing anything that would dissuade me from diving deeper into this deal. So the next thing we're going to look at is we're going to look at the infrastructure.